And it's hard for me to imagine how we are going to get inflation back to the supposed Federal Reserve goal of 2%, right? And again, I think they're going to move the goalpost. They're going to say, oh, well, 3% during a bad recession is okay. And they'll start cutting and printing at that point, which ultimately we just are going to have to pay for later on with higher amounts of debt in the system and higher inflation. It's unfortunately, to summarize, it's kind of like a snowball rolling down the hill where it just gets bigger and bigger and bigger. And there's no end until that snowball smashes into a brick wall, if you will, and just collapses.
Wait a minute, everyone. Welcome to BitcoinZella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. BitcoinZella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with BitcoinZella. Subscribe now. In today's video, Gareth Soloway dives deep into the path forward for inflation, the US dollar, and what is fueling the gold and Bitcoin bull market. Gareth also shared his prediction for Bitcoin in 2024 and what he thinks about the Bitcoin halving. So without wasting any time, let's dive into the video.
So there's no doubt price action on Bitcoin has surprised me a little bit. I think I underestimated how bullish the markets would be in late last year as well as this year as well. And I think, to be honest, Bitcoin and the stock market are very intertwined as a risk asset. Eventually, I do view Bitcoin as a long-term digital gold, but right now it goes up when the markets go up, it goes down when the stock market goes down. And so really the combination of the stock market doing well really catapulted it. We also had the ETF, the spot ETF approval. We have the halving coming up. All of these are adding to that bull narrative. So really what we have here on the chart is a trend line that I'm watching. As long as you see this bottom trend line, how we keep on coming back to it, then bouncing, then hitting again and bouncing, as long as Bitcoin stays above this level, which is currently around 66,000, then to be honest, you could see further upside. And I think, again, a lot of that will be tied with, does the stock market see further upside as well? However, if 66,000 breaks to the downside, meaning this trend line breaks to the downside, then I would be very concerned that we would go back to about the 50-ish thousand level, somewhere in that vicinity. But it's been an amazing move to the upside. It's holding relatively resilient, although granted the S&P is close to its all-time highs as well. The big question for me is what happens if we do see a bigger stock market correction? How does Bitcoin hold up in that environment? So basically, I do expect at some point the stock market to pull back enough that Bitcoin does crack this level. It could make new all-time highs prior, but eventually I do think this level gets broken. And then for me, it's looking back at the chart, and the chart tells us there's a couple major levels, right? So this would be a very interesting level at 52,000. We can see the sideways consolidation before the breakout. And then the high of the spot ETF approval was 49, and that would be a secondary zone. So anywhere between 52 and 49, that would be a very interesting level for a pullback where you would get a buying opportunity. Now, I do want to just caveat this with, if the stock market gets into a massive bear market, let's say the stock market drops 30, 40, 50%, like we've seen in 2008, 2009, then Bitcoin's going a lot lower than 50, right? I mean, it's only if, the stock market corrects 5, 10%, then yeah, 50-ish, give or take, is probably realistic. If we see, again, those bigger moves in the stock market, then I do think panic fills Bitcoin, and you'd probably see it down to 30 or even sub 30.
Bitcoin starts a new week with an uphill struggle to regain lost ground after a 15% BTC price dip. After a weekend that decimated crypto, traders are licking their wounds, but Bitcoin is already bouncing back. Sensitivity to geopolitics thus forms a key focus for the coming week, with commentators comparing recent events in the Middle East to the COVID-19 cross-market crash of March 2020. So far, altcoins have borne the brunt of the snap market reaction to hostilities between Israel and Iran, with BTC/USD managing to preserve $60,000 support. Leverage nonetheless saw a comprehensive flush, and even on Bitcoin, 30% of open interest disappeared in an instant. Going forward, there is much to contend with. While volatility is already plenty visible, Bitcoin is just days away from its next block subsidy halving. The stage is thus set for volatile conditions to continue as BTC price action becomes anything but boring. It can be safely said that this weekend produced a crypto market nightmare unlike many seen before. As news of fresh geopolitical instability in the Middle East emerged, crypto, as the only free trading markets open 24/7, saw immediate losses. Similar to events in Ukraine in early 2022, Bitcoin and altcoins sold off rapidly. BTC/UST saw lows of just above $61,000. Altcoins fared much worse, some losing 50% of their value before joining BTC/UST in what is so far a slow grind back up. Bitcoin's dominance over the combined crypto market cap hit 3-year highs last week. Bitcoin still holds above its previous cycle highs, fellow trader Gel meanwhile added, referring to monthly close levels. Everything is going to be okay.
So I think that's really each individual investor has to decide. I mean, there's risks and positives and negatives. So number one, if you buy an ETF that's based on spot, technically the ETF is holding your Bitcoin for you, which if you're okay with that is fine. It lets you be in and be out and stay in a FDIC insured portfolio at a regular brokerage. If you buy it on the spot exchanges, then you own that and you can take custody of that. But at the same time, you don't get FDIC insurance on those exchanges. So for me, in this point in my career, I'm most likely playing it via the ETFs. But I do understand if I were to have a HODL position that I was going to hold for a long time, I would probably buy it off of the exchanges and kind of take it off the exchanges. So the only thing I would point out about the halving, on social media, it gets made out to be something massive. But we are now down to only about 2 million Bitcoins left to mine out of 21 million. So yes, those Bitcoins are going to be harder to mine, doubly hard to mine, but it's only 2 million left now. And so there's still a 19 million supply that's out there amongst regular folks that can be bought or sold at any one time. And so I think it's important to kind of recognize that the halvings become less important over time. When there is 20 million Bitcoin or 15 million and a halving occurred, that was a huge reduction in the supply coming out. Now it's not so much because there's been so much mined. So I think that, again, whether we see the sell-off before the halving or after, I do think there is a sell-off coming, and probably that retrace to 50,000 is like.
The coming week holds a typical cocktail of United States macroeconomic data and commentary from senior Federal Reserve officials, including Chair Jerome Powell. While nothing out of the ordinary in itself, the atmosphere is compounded by events in the Middle East, potentially leaving already wary risk assets open to additional sensitivity. In just a few hours, we will see the market's response to geopolitical tensions this weekend. Trading resource, the Kobayashi letter, wrote in part of its weekly diary, dates entry on X, referring to the beginning of trading in Asia and on Wall Street. Jobless claims form the key data print for the week. These are due on April 18, while Powell will speak on April 16. Inflation remains an important consideration for traders, who have repeatedly priced out the odds of interest rate cuts coming sooner rather than later this year. The latest estimates from CME Group's FedWatch tool see the odds of a 25 basis point rate cut at the Fed's July meeting at 43%, with September at 45%. Given the market's sensitivity to rates at the moment, any irrational dip on data that reprices the outlook for rates as a buy. The weekend's market volatility has almost served to overshadow Bitcoin's imminent block subsidy halving at the last minute. With just 4 days to go, traders' attention remains focused on price rather than the seminal network event, the countdown to which has, in fact, lasted many months. Miners are at the forefront of the changes, with their revenue streams being reshaped in an instant as new Bitcoins per mined block drop by 50% to 3.125 BTC. Nonetheless, the latest data from on-chain analytics firm Glassnode shows the BTC balance in known miner wallets staying mostly flat since the end of March. Revenues with fees included, meanwhile, continue to circle familiar levels. Spikes in the current halving cycle are visible, most recently thanks to the ordinals boom in late 2023. And do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.